This is the way you go through the syndication business. You got to put together your plan, right? You got to know what you're doing. You can't go out there going fishing, right? This is the whole idea. Let me use that as an example. If you're going to go fishing, you got to know what lake you're going to fish in. You got to know what type of fish you're going to catch, and you got to know how you're going to catch the fish. What's your strategy? What type of bait you're going to bring? What type of hook you're going to bring? What part of the lake you're going to fish on? What time of year you're going to? You got to know all this stuff. So you got to put together your plan, right? Put together your plan, and then you're going to go out and you're going to put together your pitch book. The pitch book is based around the plan. How you're going to make your investors money, right? When we're going to fish in this lake. We got these kind of fish that are really biting right now. And we know exactly how to catch them. Here's our strategy. You put that together. You put that in a pitch book. You go out, you make a list of investors. You go talk to them. And you say, hey, I've got this great plan. Let me talk to you about it. And at the end of the conversation, you're going to say, hey, if I find a property that matches what we're talking about here, would you like me to bring it to you? That's the one question. And they say yes. They're going to go on your yes database. And so now you got your yes database. And you're going to manage that yes database. And so what you're going to do with it is you're going to take those names and you're going to stay in contact with them, because it's all about a relationship business, right? Just like you're a broker, Dwaine, it's relationships, right? Mm-hmm. Just like investors, they're your customers of your attorney. You got clients. I mean, they're all customers. We need to take care of them. We need to build that relationship.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Craig Haskell. He is the author of The Inside Game to Real Estate Value Investing, Syndication Wealth, and How to Take an Apartment from Money Pit to Money Maker. Craig is also the founder of ValueHoundAcademy, a leading training and coaching platform for new and experienced real estate professionals eager to seek inspiration and education on syndication to capitalize on today's real estate market. How you doing today, Craig?
Fantastic. Thanks for having me on. I really appreciate it. And I look forward to sharing some nice tips for your audience.
Yeah, I really appreciate it. Again, like we had mentioned pre-call, I've been following you for quite a long time. You kind of gave me my initial basis education on syndication. You had the website where so much loaded content on there. It's just like you kind of get lost in there. Different avenues from raising money to the management side to a whole bunch of different stuff. So I really encourage people to check out your website and your programs to kind of get the ball started, in the syndication business.
I know.
So I know that you have a large following. People know about you, but for some of the listeners that are new to you, would you mind kind of sharing us with your background and kind of how this whole process started for you?
Okay, that's a good idea. So I started back, I'm 58 years old. I started back in the late 70s when I was in college in Long Beach State. I was in college there, and I wanted to learn about real estate. I didn't have any money. There was a guy by the name of Robert Allen. And I don't know if many of you have heard of him. It's been a long time. But he was the big guy, the big guru that had all these seminars and books and all this kind of stuff. So I latched on and I said, I don't have any money. I'm going to buy some properties, no doubt. So I had a hard time doing it. I got out of college in 82 and I had a hard time doing it because in Southern California, where I'm from, people want cash. They don't want nothing down. So after about a year and a half, I tried it and it just didn't work. And so I liked real estate so much that I decided to get into the commercial real estate business. And, I had to get my license and I had to do a bunch of stuff. And I ended up working for a local regional firm called Norris, Beggs & Simpson in Newport Beach, California. I specialize in retail space and I specialized in apartments, office space. Those three things really were my focus. Fortunately, I had a big learning lesson. I got a lot of my clients were syndicators that, were making a lot of money, and I kind of learned what they were doing. So I finally kind of saw what we were doing. So I went out and bought a house, just a house, and brought a partner in. We didn't do anything down, nothing down. It was all money we put up. In fact, we paid like 60%. We got a financing for about 40%. We fixed this thing up as a house, four-bedroom house on a golf course. My partner each made about $22,000. And then I said, you know what? I like this. I'm going to start doing this more. So after about 5 years of being in the brokerage business, and I had a property management business as well, I decided to branch out and buy some properties. And I looked at the where to go, because Southern California was not a good place to go. And I found Houston. This is back in 1990 and 91, back then. And back then you could buy buildings that were basic, beautiful brick buildings, 1,200 units. You know, you could buy them for like $6,000 a door. And I thought, I'm going to go do that. And I thought, you know, it's from Southern California. It's 3.5, almost 4-hour flight one way. I thought, no, I'm not doing that. So I found Phoenix, right? Phoenix was just a 1-hour flight or 6-hour drive. So I decided to do that. And we went out there, and I already had some of my clients, so they were investors. So I put together some partnerships, and we bought about 1,500 units, and we held them for about 6-7 years, made about 6-7 times our money. And then I got out of that, and during that time period, I was working with other bigger clients, just consulting work, helping them with their properties, helping them buy properties, manage properties, and so forth. And I did that for quite a while, and then, you know, I got involved with educational business back in early 2000. So I've been in that heavily ever since. So that's kind of the background.
Oh, excellent. Yeah, so we had talked pre-call. We're just kind of talking about the different subjects we can talk about. Well, of course, the biggest topic is, you know, getting the money, you know, how investors are raising money in order to get these deals. And the old saying is that you find a great deal and the money will come. And speaking from experience, it doesn't work.
It's BS, unless you have a rich uncle or a rich dad.
Yeah, exactly. So
but most of us don't.
Yeah, that's you know, like I said, that unless you're in that situation, you know, you have to put investors' money together to buy these deals, and that's how the very successful syndicators, investors are doing it. Can you kind of talk about the process of raising money successfully from investors?
Yes, I will, and I want to, because I need to. I'm out there pushing against everybody else, because everybody else thinks, like you just said, that money will come if you find a great deal. Most people think that to buy a deal with investors, they got to go find a deal first. That's wrong, because you don't know the right deal you're going to find. You just don't know. You don't have your investors lined up. So you got to go out there and you got to figure out what it is you want to do. What kind of properties you're going to buy? What are the types of properties I'm going to buy? I'm a certain type of property, a certain location. It's going to have a certain strategy. Maybe if you're doing apartments, it's going to, you know, affordable housing is a big thing right now. So you're going to focus on that strategy. You're going to put together a pitch book about how you're going to solve that problem. And then you're going to go out and talk to investors. You're going to build a database, and then you're going to go out and find a deal, right? Once you've got like 10 to 15 people lined up that say, yeah, I like what you're doing. This is exciting. I like your pitch book. I like your business. What do you call a business plan? I like your business plan. So when you find a deal, bring it to me. So after about 10 or 15 people you get lined up that say, yeah, I'm interested in what you're doing, you go out and find a deal. Then you bring that deal back to them and say, hey, remember that business plan we were talking about? Well, I found the perfect deal that matches exactly what we want to do, and we're going to load the truck on it. Let me tell you about it. And that's how you raise money.
Mm-hmm.
It's a real simple, quick way to tell you about it. That's how you do it. The
and
right way.
Especially from our experience, like, so when you're dealing with an active deal, you have it in escrow or you're negotiating it.
Huge risk.
You're talking about a timing issue, and you don't want to lose your escrow deposit. So you have to make sure that everything is lined up on top of the many different checklist items that you have to worry about anything. So you want to make sure that at the very least, you know, all the investors, everything's lined up. You know, the money is good. So now you can focus on, you know, commencing this deal together.
Right.
So as far as any tips to working with us, I know you just, you know, networking with other people, but is there any other steps that you would take as far as reaching out to get potential investors for your projects?
I think the number one thing is your pitch book. Everybody that I work with, it's the most important thing because that's the core. That's who they're going to be. That's what they're going to be known for. And they put that thing out there, that pitch book business plan, and it starts to get people excited and people start talking about it. That's really the core of this, is going out there and putting this thing in front of people that like real estate. I mean, if you're gonna invest people's dollars, they have to be excited about what you're doing. And the most likely place to get people are people that are in real estate. I mean, I got clients that I work with that were CB commercial real estate brokers, and they went and got other salespeople, and they put together a partnership and bought a deal. Real estate people want to be involved in real estate. Construction people really want to be on. They're just not that sophisticated, right? But they want to be involved. So that's a source to go to. Business owners are more entrepreneurial, and they're willing to take more risks. So they're more likely to be. Let's see, attorneys, right? Attorneys are another one because they're risky. They're more entrepreneurial. They're willing to take more risks. Those are the types of investors you probably go through first. Obviously, family and friends, right? That's how most of us get started. We start small. I recommend start small. Make your mistakes early. You don't even know what the path looks like, right? You don't know what it looks like. You want to learn the easy way. Start small. You know, most people don't want to do that. Want to buy a $40 million property, but the idea is most businesses start small. They start it's a hole in the wall. They develop the proof of concept, then they go out there and they start to go bigger. So start small and make it easy on yourself to raise the money because you shouldn't be raising more than $300,000 to $500,000 on your first deal. Just so you see it. So once you go down that path and you've been through it and you've made all these mistakes and they're easy mistakes to fix, right? Because it was small. Now when you get back on the path and you start to do it again, you can go bigger because now you know what's down that path. There's a gremlin down there behind that tree right there. You know that because you've been down that path. So that's my thoughts.
As far as like the pitch book, should you be putting in like the marketplaces that you're looking at, or example numbers or expected or potential returns to kind of show them like what this deal would look like if they got involved?
Yes, the pitch book is really most people think they build them like brochures. You got to get people excited. The core of the pitch book is about you solving a big problem in a big market. That's the core of the pitch book. People that are investors want to be part of a bigger societal problem, right? If they're a bigger part of a societal problem, they feel good about that and they can still make money at the same time. So it gets people more excited. So I think that, having, like, for example, just a problem, you got affordability. I did the Hispanics years ago. I've done the senior housing. I've done a lot of different types of niche markets, because apartment building is more than just a commodity, right? It's a place to live and place people to get together. When I did the Hispanic deal, I'm looking for properties that have tennis courts or fields, so I can put a soccer field in. Mm-hmm. I'm not looking. And so, because I know my tenants, I know what I'm going to give them, and they want a soccer field. We had soccer tournaments, we had clinics, we had tournaments, we had all kinds of things that catered to my demographic. And so you can do the same thing with the college kids. I did the college kids. We had the gaming night. We had dating games. We had all kinds. These are the kind of stuff they want. So it makes you more competitive in the marketplace because you're different than everybody else. And we always got 25% higher rents because we were really giving these people what they want.
That's very good point. It's like niching down, finding a particular thing that you can talk about and get your investors excited about. That's really good stuff.
Yeah.
As far as what's your thoughts on partnering with other syndicators? Say if you are kind of lacking in certain resources that. Oh yeah. As a
matter of fact, on my website, I got an interview with Sam Freshman, who's almost 60 years now, been around forever. He's the godfather of syndication. Started off as a syndication attorney. and he built up a huge multi-million-dollar portfolio. But he says, hey, if you bring me a deal, I'll partner with you. If you don't have the money, I'll give you some money. If you need some. So there are people that will out there that will do that for you, and you need to do that, because if you're just getting going, you need some credibility, and the other person that you're partnering with could give you that credibility and help you be more successful.
Yeah, absolutely. It's just from my experience as a broker, I will sell a deal to a client, and since I'm starting out, I offered, hey, can I put some money into own this with them? And then after you do a few deals, then you can go out and do it yourself, or you can continue it depending on the type of role that you want to play as an investor, and meeting with your ultimate goal of, do you want to be a limited passive investor, or do you want to be more active, and kind of strategize it that way? So that's even greater point to what you're saying.
I would say, Dwaine, if you're a real estate broker like yourself, that's a great way to start. Great way to start. You'll start quicker.
Absolutely. You had mentioned, as far as reaching out to investors, I know that we have like attorneys, construction workers, brokers, business owners.
Yep.
Now with the internet age, it's just so much ways to get information out there. Is there any tips as far as, like putting out webinars or writing articles and blogs to kind of reach out to get potential investors as well? Or is there any other traditional means that you suggest as well?
Yeah, one of the ways I recommend that you raise money is put on these real estate seminars. Like we used to have these lunch meetings, right? These lunch investing meetings to learn about real estate investing, right? And we'd bring in some Mexican food, which is cheap, some cheap soda, some chips and salsa, and we sit around and we talk about real estate investing at lunch while everybody's eating lunch. So this is how you get people to show up. Food.
Oh yeah, absolutely. Yeah, that's a very key thing. So education and food. So
yeah,
can't go wrong there.
Yep.
So we talked about strategic partnering and other ways to find investors online, doing meetups and stuff like that. You have a 8-step system as far as like going through to become a syndicator. Can you kind of briefly touch on that as well? And
well, yes,
the program involves?
Absolutely. And it's 8 steps, and it's a whole process you got to go through. This is the way you go through the syndication business. You got to put together your plan, right? You got to know what you're doing. You can't go out there going fishing, right? This is the whole idea. Let me use that as an example. If you're going to go fishing, you got to know what lake you're going to fish in. You got to know what type of fish you're going to catch, and you got to know how you're going to catch the fish. What's your strategy? What type of bait you're going to bring? What type of hook you're going to bring? What part of the lake you're going to fish on? What time of year you got to know all this stuff. So you got to put together your plan, right? Put together your plan, and then you're going to go out and you're going to put together your pitchbook. The pitchbook is based around the plan, how you're going to make your investors money, right? When we're going to fish in this lake. We got these kind of fish that are really biting right now. And we know exactly how to catch them. Here's our strategy. You put that together. You put that in a pitchbook. You go out, you make a list of investors. You go talk to them. And you say, hey, I've got this great plan. Let me talk to you about it. And at the end of the conversation, you're going to say, hey, if I find a property that matches what we're talking about here, would you like me to bring it to you? That's the one question. And they say yes. They're going to go on your yes database. And so now you got your yes database, and you're going to manage that yes database. And so what you're going to do with it is you're going to take those names and you're going to stay in contact with them, because it's all about a relationship business, right? Just like you're a broker, Dwaine, it's relationships, right? Mm-hmm. Just like investors, they're your customers of your attorney. You got clients. I mean, they're all customers. We need to take care of them. We need to build that relationship. So we do that in the database management process. And when we get to 10 to 15 people lined up that say, yeah, I like it, and you continue to stay in contact with them, you're going to go out and find a deal. You might be looking at a deal already, but you're going to be more aggressive, and you're going to find that deal. You're going to get it tied up, and you're going to review it, and you're going to really dig in it. I got a 4-bucket system. You go in there, you just make sure you take chaos and get rid of it and make it more organized, and then you're going to go out there, and at some point in time, you're going to remove the contingencies. But before you do that, you're going to engage your securities attorney. He's just don't get scared about an attorney. He's just a person that's there to make sure you're safe and have the right documents. That's all he does. He's not a business person like you are. He's just an attorney. He's just like a property manager. He's like a contractor. He's just a vendor. That's all he really is. So he puts that together, and then you take this out, and you on your list you had 10 to 15 people. You're going to pick the A list, right? The ones that you know for sure are going to close. You're going to pick those guys first, get them lined up, go talk to them, put together a nice little cover letter. And inside the cover letter, you're going to have a nice little sales pitch in there, and you're going to give this to, hey, I've got people that are interested. It's going to go fast. If you want in, you got to move quick. So let me know. And they get that, and the ones that get back to you, you put it in the bank account, wire the money, and get the deal closed. That's pretty much big picture.
As far as kind of going down, I know that all like the little key points of, like you mentioned, securing the deal, the escrow, analyzing the deal and all that, that's whole kind of getting it down. And we kind of briefly talked about as far as the timing. So making sure to keep in touch with those investors, especially when you're timing your deal, as far as how much time you get for due diligence,
right,
and stuff like that. That's definitely key there.
Well, I had, let me give you back up just a second, because I've had experiences where I tell these people in the database management process, when you're going to a baseball game with somebody, or you're sending them an email or whatever you're doing to stay in contact with these guys, a lot of my guys that go through this, I tell them how important it is, the relationship part. They just don't spend the time on it. So when they get to the time when they finally have the deal and they have a database, right? But he'd never gone back to talk to them when they get ready to raise the money and go out to the investors. Now they don't want to invest because they haven't heard from them for forever. So it's real important to stay in contact, build those relationships during the process.
Absolutely. Is there any mistakes or pitfalls that for newer syndicators to watch out for while doing this process? I know you had mentioned having a very competent attorney on the team, probably some type of person to analyze your numbers, analyze the market. I know these little small things because it is real estate. But is there any other tips that you can give us to avoid as far as mistakes and try to overcome them?
Yeah, I think one of the biggest ones is chasing rabbits, right? Syndicators are known for out there just chasing anything that moves, right? And they don't not focus, like I said, one strategy, right? So they're out there chasing all over, trying to find a rabbit that they can catch. And usually it's a scrawny rabbit that barely pencils, right? And they try to go out and raise money, and they can't raise the money. So you got to have a strategy. You got to really know what you're looking for, and you got to find what you're looking for. So when you go back out, your investors get excited, and you can raise the money, right? Mm-hmm. And I think another big thing is that syndicators don't. We obviously talked about this. Syndicators raise money too late. They're not in there early enough. So that's another mistake. And syndicators don't give themselves enough time in their due diligence, right? They got to make sure they give. And there's certain clauses you're going to put in your language to help give you more time, allow you to get more time. So I think that you need to put some of those things there to protect yourself. Even though you did raise the money first, you just never know what's going to happen. So you're a syndicator. Your earnest money's up. It's not your investor's money that's at risk. It's yours. So you got to make sure you protect that. Mm-hmm. Those are pretty much three big ones right there.
I know the main goal will be to co-own the properties that you go in with your investors. But the other things for syndicators is the fees. Can you kind of talk about like the potentials of making fees or stuff like that?
I'm not sure I get the question. Tell me again.
As fees, as far as like acquisition fees for when you purchase a property, refinance fees, performance fees, stuff like that.
Yeah. So the types of fees let's talk about the types of fees you can get as a syndicator, and we'll talk about the fees you're going to pay to close the deal. But the fees you can get, or you can get an acquisition fee anywhere from, depends on the size of property. If it's a $10 million deal, you might just get 2% or 1.5%. If it's a $1 million deal, you might get 4%. It just depends. But somewhere in that range, because you're bringing a lot of value. I had a client, just going to digress for a second. I had a client that I worked with that's multi-billion. He's just really big right now, and he focuses on student housing, by the way. He had a hard time focusing on, what was going on. And we got him focused. It made a big difference. But I lost my train of thought. What were we talking about? Oh, fees.
Yes.
So anyways, back to him. He plugged in a deal. He bought his first deal. It was $3.5 million deal. It was in North Carolina for 46 unit. And while he was in escrow, they found another deal right next door on auction.com. Ended up being, almost 100 units, 96 units. And he turned it into student housing. But during the process, he was working his buns off. Man, he was. I said, man, you only got, a $30,000 fee in there. You need more. You're working way too hard. So he ended up going back to the partners after he already raised the money, and they agreed to pay him $100,000.
Wow.
They knew. My point is, make sure you compensate yourself enough, because if you go through it and you think about it, you're going to go out and source the deal. You're going to analyze the deal. You're going to do all the due diligence. You're going to run around with all the brokers, the lenders. There's just a lot of things that go on. So make sure you get paid a nice fee. Another one would be the asset management fee. Now, if you're into property management, you can do property management, but asset management is typically about 1% to 2%. You do construction. If you're going to do, like I do a lot of value add properties. And so we go in and take our team in there and fix them up, and we get paid to oversee that process. You can get paid for, if you're doing commercial space like you do some of, Dwaine, you can get paid leasing fees for doing that, for leasing the space.
Mm.
You're going to get reimbursed for all your expenses that you encumber. You're going to get accounting fees. You're going to have to take it to a place to get the taxes done, and any accounting you get done, you get paid back. And there's some other ones too, but those are the basic ones. I've got on my site, ValueHoundAcademy. There's the basics of syndication, and I go through all the fees in there. So if you want to, and it's free, it doesn't cost anything. So if you want to go in there and check that out, you can. Yeah,
that's a very good resource. And like you was mentioned, that your time is very valuable. It takes a lot of time to source the deal. If the deal is out of state, you have to go fly out and go see it, and walk the unit.
They've done that. Yeah,
it's a lot of work, and and investors know that you're bringing a lot of value to the table for them to get a good return. So of course you got to get your payment for that. So that's definitely a good point there.
Shit, we were going to buy a deal out in San Antonio, and 400 unit property. We're going to put $5 million into it, and this is back in 2008.
Mm.
And in 2008, that's when the financial crisis collapsed. We were like a week and a half to closing this thing, and our interest rate went down almost 200 basis points, 175 basis points, and so the deal just blew up, obviously.
Wow.
But and I spent $40,000 going back and forth due diligence on this thing, and I lost it all.
Wow.
So it's not just that you get all this money. There's times you're going to lose money. So you need that money.
Mm.
So it was not a fun thing.
Can you kind of talk about maybe some of your top clients, like success stories, or one that comes to top of mind as far as, maybe a newer one that started into maybe like some very larger ones?
I've got, let's go with the college guys. Let me finish the story. They bought this thing. They were all in, and they were projecting in 5 years to double the money, but they ended up more than doubling it in 2 years, almost 2 years. They bought a portfolio for 7, those 2 properties for 7, and then they went on, and 2 years later they decided to sell it, and they made $11.4 million.
Wow.
The deal. Let's see. Now they've gone on and they manage about $250 million of real estate, student housing around the country. So we got Seth Wilson, who's a former combat pilot. Here's a guy that he lived in his 5th wheel for a year and a half. I believe it was a year and a half, maybe 2 years, to save money to buy small apartments. He ended up buying small apartments, and he ended up buying a 48 unit property in Kansas City, and he turned that thing around, and I think he sold it for $2.5 million or something like that. I got a guy out in Florida. Here's a guy that came to one of my boot camps about syndication, and he takes me aside and says, "Craig, I can't buy any deals. He's in Miami, Florida. The cap rates are so dang low. I can't touch anything." I said, "Well, Richard, you're not a cap rate buyer. You're IRR buyer. You got to look at this thing from IRR standpoint, not cap rates. Price is what you pay. That's cap rate. IRR value is what you get. That's what Warren Buffett says. So we're value buyers. We're looking for value. So I sat down, ran some numbers for him on the table, showing him how you can add value to these properties. So now he goes out and buys a property from a fireman who's owned the property for 15 years, didn't do anything in property. He had some deferred maintenance. It was 100% occupied. And yes, 100% occupied is bad management. So he had 100% occupied. So he bought the property, put in about $600,000. He bought it for $3.3 million. He put about $600,000 in there. He raised the rents anywhere from $400 to 600 units, $600. And he just called me 2 days ago and says, "I think I'm going to sell a property." He told me he's never going to sell a property because it was such a cash cow. And he said, I just got quoted by the broker of $6 million.
Wow.
So there's some guys out there doing pretty good.
Mm. Yeah, some really good stories.
But it takes hard work. It's not easy.
Exactly.
Let me dispel that right away. It doesn't just come to you on a silver spoon, right? You got to go out there and earn it. You got to work hard. People that work hard and put in their hardest effort have more success than people just wait for things to come to them.
Mm. And to kind of segue into that, my next question is the importance of having a coach or a mentor to kind of help, lessen that learning curve or get you to that next level. Can you kind of talk about the importance of that and kind of what your program entails?
I think most successful people have someone that's watching over them. And I can tell you, I was thinking about Richard. He tell me every day, "I can't imagine doing this without you." I just can't imagine, because it can be a tough business. It's a very sophisticated business, especially on the first one. That's why I say start small, because you're going to make mistakes. I guarantee you. And that's part of life. Anything you do in life, you're going to make mistakes. You started walking, you started riding a bike, you started playing baseball, you started doing whatever, you made mistakes. You got better, you learned from those mistakes, and then you went to the next level, and you made more mistakes, and you kept kicking that stair step ladder up. So you got to embrace mistakes. You got to really embrace them and accept them, because they're going to make you better. Mm-hmm. As a matter of fact, one of my favorite quotes from Nelson Mandela is, "I never lose. I either win or I learn."
Mm-hmm. That makes sense. What would be the first step for a new syndicator? Is it, getting a copy of your book, reading some of your blogs and articles and videos?
Well,
or you suggest the first step, or just maybe look into getting a coach?
I think you need to go to ValueHoundAcademy.com. That's my website. I got like 600 pages of. You just got to put your name and add. You got to be a member, right? So it's a free membership, and there's got videos on there. I got audios. I got articles on property management, acquisitions, on raising money. I got on everything. So you go there and learn. At the same time, start to think about a focus for you. What is it you want to focus on if you're going to buy properties and you're going to try and make investors money? What is it you want to focus on? What's the little niche you want to focus on? And really give that some thought and talk to people, because it takes research. All these big companies, they started with some little research, right? Nobody likes doing research, but you got to do a little research and get that germinating and start to think about that. And then at some point, we got some training programs. If you feel like you're ready, you can always sign up to those.
Perfect. All right, so we got your website. Is there any other way to get in contact with you?
Send me an email at Craig, CRAIG, at ValueHoundAcademy.com. And that's the best way to get a hold of me. The Value Hound Academy is a site that's dedicated towards syndicating value add real estate.
Are you guys also on Facebook as well?
Yes, we're on Facebook. Check out my I have this website. I got a lot of good content on there. You should check it out. I put it up there. It's called the Syndicate Game. I got a new game I'm creating that's starting here in a few weeks, but it's called the Syndicate Game. But all it is a lot of people talking about issues and having questions, and I put up a lot of educational stuff.
Perfect. Yeah, that's like I said. Yeah, I've been following you for years. You have a lot of content, and it's just so much in this. Like I said, that's the best place to start if you want to get into this business or expand your business as well. Yeah. So, but Craig, thank you so much.
Right on, Dwaine.
Tremendous amount of value. Really appreciate you taking the time out of your busy schedule.
Thank you so much, Dwaine. Have a great day, and we'll catch up with you later.
Absolutely. Take care.
Okay, bye-bye.
Bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.